Right. You know, it is said that you buy value and you pay price.
Yeah.
Right. Can you explain that, and what is the difference in buying value versus buying a price?
So price is what we see on the screen
Yeah.
on a daily basis.
Yeah.
Very simple to explain. And what is value? I mean, value, the definition of value is different for different people, right? So many would want to have, assets minus liabilities as a definition of value. And these are methods based on the balance sheet side of things. But in India, the problem is that the net assets or the assets minus liabilities, the net assets don't even earn cost of capital. And we have something like 2/3 of companies in India or 60% of companies in India which are not able to meet the cost of capital. So the assets which are being owned in the balance sheet should be trading at less than book value because they are not able to meet the cost of capital. So in India, we have seen that the balance sheet side of understanding value is rather flawed. And of course, in the international and the true speaking sense, value investing is buying businesses with low price to earning, low price to book, etc. I mean, in our country, that doesn't work. For the simple reason that we are just about a $2.5 trillion economy. The asset base is not that big. Plus, we are a growing economy. So, our understanding of value is hinged on the profit and loss side of the company, the profit and loss account of the company. Our understanding of value is that it's the present value of future cash flows of a business, right? So, it's a growing business, and over long periods of time, it's going to make profits, and cash flows are a derivative of profits. The present value of those cash flows is the true value of a business. Price is what we see on a screen. If there is a difference, that is something which we call the margin of safety. And if that margin of safety is good enough, then we have an opportunity. So value is something which is there in the head or the brain or the mind of the manager who is understanding that business. Price is what you see, and the world sees only the price. So if there is a disconnect, the manager or the person who is doing the research on that particular company only understands the future value of that business, so to speak, the future cash flows of that business, extrapolated mentally into his head and arrive at a particular price. And one needs to understand the definition of value on an ongoing basis. So the nearest period when we are presented with data from companies is the quarterly numbers, right? Because balance sheet side of things, of course, you can understand, you can extrapolate. But the P&L side of things, you get reported every 3 months. So data changes, and then we need to change our assumptions based on the data that is coming through to extrapolate a lot about the future.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.